Good evening, everyone. We'll just give it another 2 minutes for the participants to join, and we'll start in about 2 minutes.
Ajay, we can go live, Ajay.
Yes, Dinesh, we can. I think we can start.
A very, very good afternoon, ladies and gentlemen, and thank you for joining this webinar, which Dhruva Advisors has organized in conjunction with FICCI. In the last several months, one has seen a lot of action happening on the international tax side, whether it is on account of Pillar 2, Pillar 1, postponement, etc., new guidelines coming out from OECD. But we haven't had too much of action really on the domestic side, and CBDT did not want to be left behind. So here we have a circular issued by the CBDT under Section 194R of the Income Tax Act. We are all aware, of course, that Section 28(4) has been on the statute for many years, which speaks about taxation of any benefit or amenity provided by a person who's carrying on any business or profession. And the question was, how do you value such a benefit, and how does it get reported, and how does the tax office capture transactions which give rise to a benefit under Section 28(4). And CBDT came out with circular under Section 194R to provide for, so 194R itself, first of all, provided for withholding obligations. Under 194R2, we had an ability, a power granted to CBDT to come out with a circular for the removal of difficulties, such circular to be placed before the Parliament. And now CBDT has come out with this circular, the circular, of course, being effective for transactions after 1st July. And the circular has undoubtedly aroused a degree of conversation, generated its own fair share of controversy, because it speaks about number of things which probably go far beyond what 28(4) envisages, far beyond what one would regard legitimately as for removal of difficulties. And we thought it was only appropriate, given the widespread impact of this circular on virtually every single taxpayer, and given the fact that it is a withholding requirement, where if you do not withhold, there could be implications under Section 201. There could potentially be, in certain circumstances, implications under 40A, 1A, etc. That we do this seminar, webinar, talking about interpret the circular. So over the next about an hour, my colleagues Ajay and Umesh will sort of deal with the circular, talk about the various issues which practically arise in the interpretation of the circular. Clearly, the circular applicability has to be seen in the light of business realities. Nobody sitting in a air-conditioned room can envisage all circumstances. However, ever since the circular has come out, we have had numerous calls from clients. We have looked at broadly how it impacts many, many organizations. And we thought it was important for us to share with you our thoughts on the subject. More important, after all of that is done, we thought it was important that we come up with a way forward. We come and tell you what is it that is required to be done by each taxpayer as we go forward, and what role potentially FICCI can play in this whole regard. So I turn over to Ajay and Umesh to take you through the provisions of the circular, and then we'll talk about the implications, what are the open issues, and what is the way forward. Ajay, Umesh, over to you.
Thank you, Dinesh. Good evening, everybody. So before getting into the guidelines that have been issued by the CBDT, what Umesh and I thought would be good is to just sort of lay the context of the section 194R and also the provisions under which, or the powers under which the CBDT has actually issued these guidelines. So as most of us would know by now, 194R was introduced by the Finance Act 2022, comes into effect from 1st July 2022, provides for deduction of tax at source at the rate of 10% on any benefit or perquisite that is provided. So the nature of payment on which, or the act which attracts TDS, is the provision of a benefit or a perquisite, and that has to arise from business or exercise of profession of the recipient. What this means, Umesh and I will discuss as we go forward. It applies to any payer, which is anybody other than an individual HUF who's subject to tax audit, and therefore it applies pretty much to everyone other than people who are getting less than 10 million in case of business and 5 million in case of profession as their gross receipts. The payee has to be only a resident of India, and the TDS rate is 10%. And the timing of deduction is it needs to be done before you provide the benefit or the perquisite. Now, the effective date is 1st July, and the threshold is 20,000 per year per recipient. And so the 20,000, the way it is to be computed is that you will take for the full financial year 22-23, which is starting April 1. And then you will deduct tax only on those perquisites and benefits which are provided after 1st July. So for the purpose of computing the threshold, you will take the full financial year, but the TDS applies only after 1st July. The explanatory memorandum and the budget speech, the stated intent of this section is really to widen and deepen the tax base, because the government believes that in many cases, the recipient does not report some of these benefits which are obtained in the tax return and therefore not offering it to tax, which is the reason they have brought in a provision of TDS on this. The guidelines are issued under a particular section, and where those power come is really section 194R, subsection 2 empowers the CBDT to issue guidelines for the purpose of removing any difficulty. And the guidelines, once laid before each house of the parliament, will be binding on the revenue as well as the person providing any benefit or perquisite. Therefore, very important to note that these are guidelines issued under 194R2 and not under section 119, which is the normal section used by the CBDT and from where the CBDT draws power to issue other circulars. What this means, we'll just hear it from Umesh in a few minutes. The liability to deduct tax is on the person responsible for providing the benefit. In case of a company, it's the company or the principal officer. In other cases, it's the person who's providing. The recipient may still be able to take a different view as far as taxability or valuation is concerned. These are only TDS provisions. And once a TDS is done, thereafter the taxability and the primary liability of this, even in excess of 10% wherever it is applicable, will be in the hands of the recipient. These provisions are applicable to charitable institutions and government entities. One last point on the basic structure and how the provisions work. If the TDS is to be borne by the payer, then would have to be grossed up. And of course, we'll have to remember if higher rates apply with the permanent account numbers not being there. I'll just request Umesh to take us through what these guidelines mean, what's the interpretation, whether the power drawn by CBDT is right, etc.
Yeah, thank you, Ajay. Very good evening, friends. And Ajay has already touched upon that these guidelines have been framed pursuant to subsection 2 of 194R. And as we all understand, 194R2 is basically brought on the statute to enable the government to remove difficulty. But as we scan through the circular, and if we look at the fine prints, it appears that the circular seems to have gone wider than for the purpose of removing difficulty. And therefore, the question that's up before us is that is the circular trying to remove difficulty in interpretation versus removal of difficulty in implementation? To us, it appears that the circular, the power is only to remove difficulty in implementation. Interpretation is something which is left to the courts. And therefore, to the extent the circular is widening the scope of section 194R, it may be held to be outside the powers, and therefore it could be liable for challenge at an appropriate forum. So I really don't want to take you through the technicalities, but it appears that to the extent the circular is widening the scope of the section, then it could be ultra wires the powers of the CBDT and therefore liable for challenge. Yeah, Ajay. All right, let me take up this particular aspect as well. So when we look at the applicability of section of the circular, the memorandum clearly makes a reference to 28.4. And as Dinesh said, 28.4 has been on the statute for many years. There was a perception on the part of the government that there are a lot of benefits which are being provided in kind, and these benefits are not coming within the tax stream of the recipients. And therefore, to try and possibly tackle these benefits which are being given in kind, a TDS provision is introduced. And we all know that once a TDS provision is introduced, there is an imprint that is created, and that helps the tax department to keep a tab on all of these. Now, when we look at 194R, there are 4 important aspects that come to light. Number 1 is that there has to be a benefit or perquisite, which has to be either convertible into money or not. And I think each of these terms are relevant. It has to arise from the business. And I think each of these terms will have some implications in terms of how we interpret the section. So when we look at what is the meaning of benefit or perquisite, some of these terms have been used in the context of employer-employee relationship. Widely, we know what a perquisite is. Amongst the two, perquisite is much easier to define because it's an amenity which is provided or an obligation of the recipient which has been discharged by the payer directly. So perquisite doesn't seem to be very complicated to define. But what is a benefit can be a very, very complicated situation. As we go through some of the case laws that have discussed what benefit is in the context of 2/24(4), in the context of a charitable trust where, if the trust is providing benefit to the trustees or specified person, then it is liable for disqualification. So some of the principles that come to mind is that benefit has to be an advantage that is derived by a person over and above what he was ordinarily expected to receive from the transaction. It has to be in the nature of income, and therefore whether notional items could be covered within the meaning of benefit or perquisite. I think courts have taken a view that notional items cannot be. So look at a situation where a parent has a subsidiary and parent advances an interest-free loan to the subsidiary. Whether that can be regarded as a benefit will be a mixed question of fact and law. Both the terms benefit and perquisite have to be read together. They derive color from each other, and therefore the principles that are applicable for determining whether it is a perquisite to some extent will also apply in trying to understand what the term benefit is. So anything which is abstract, notional, not real, may not be regarded as benefit. The next important term is, and just one other point on the benefit perquisite, with whose perspective we have to see whether it's a benefit or perquisite. Clearly, not from the giver's perspective, but from the recipient's perspective, because whether something is benefit or not has to be checked from the perspective of the recipient. The other important term, which is very, very crucial, is that it has to be arising from the business. And I think these are the issues on which we will require a little detailed analysis on the facts to understand whether the benefit is arising from the business or exercise of a profession. So if it's a salaried employee, clearly 194R is not applicable, because a salaried employee, barring a situation which we will deal with later, in the case of a salaried employee, 194R may not have any application. Now, to understand that whether it is arising from a business, some of the principles that emanate from the various decisions are that it cannot be a one-off transaction. There has to be a regular business which was there between the giver and the taker, and as a recompense for whatever is the business that has been transacted between the parties, there is an extra advantage which is proposed to be given to the recipient. And in such a case, a benefit could be held to be arising from a business. Now take a case where I am a MNC automobile manufacturer and I have contract vendors. I would enter into multiple arrangements with the vendors, provide them some machinery, provide them some other support. But ultimately, all of these are factored in the price. If I give additional machinery to the vendor, then possibly the manufacturing charges or the contract labor charges that the vendor would apply could be lower. And therefore, there is a sense of quid pro quo that would be there. In such cases, whether there is a benefit or not, which is arising from the business itself, could become something which we'll have to determine given the specific facts of each case. Some very, very important principles that will become relevant is that can you actually say that there is a benefit when something is contractually agreed, or a benefit could arise only in a situation where something is ex gratia, voluntary. If you set some performance conditions and those performance conditions are achieved, and there is a discretionary element on the part of the giver to give the benefit, in such cases, one could take a view that there is a benefit which is provided. Second important question is that should there be a privity of contract between the provider and the recipient? And I think all of these terms will become very important, because look at a situation where you have a distributor and who's distributing products of a manufacturer, and the employees of the distributor are incentivized by the manufacturer. Now, there is no privity of contract between the manufacturer and the employees of the distributor, but whether such a situation could also be covered as a benefit, again, these become very important aspects to determine. Possibly the view that could be canvassed is that while there is no direct express privity of contract, but the privity of contract arises from the relationship between the manufacturer and the distributor, and therefore it might be possible to take a view that if whatever has been provided to the employees of the distributor, if it is flowing through the distributor, either directly or indirectly, then it could be considered to be a benefit. We have quite a few examples where some of these things will become relevant. So take a situation where there is a there is a multinational chain. It could be Vodafone, it could be Domino's. They have retail outlets all over the India, and all of these retail outlets are furnished. The premises could be owned by the owner, but these premises are furnished to ensure that there is a uniform look all across. Now, whether the cost of furnishing can be considered to be a benefit, in most cases, one will have to look at the factual situations to understand whether there is a benefit, because if it is provided that this will be a dedicated outlet for a period of 3 years, 5 years, then one can take a view that there is no benefit. But all of these issues will need to be looked at from an overall analysis of facts and the law. Yeah, Ajay.
Thanks, Sumesh. So what we'll do over the next half an hour or so is really discuss the 10 questions which are answered in the guidelines. We've attempted to put these in a few logical buckets, bunched up some of these questions and covered. And we also intend to cover certain aspects which are not clear arising out of some of these. So the first set of questions are around the scope and the coverage. And the very first question is whether the deductor is required to check if the benefit or perquisites that are being given is taxable under 28(4) or any other section in the hands of the recipient. The CBDT very categorically states that there is definitely no requirement to check if the amount is taxable or not. And that's not something that the payer is expected to check. And in fact, they go on and refer to decisions that are there, Supreme Court decisions in PILCOM, 196D, they talk of 195 to say that these are sections where there is a requirement to examine if something is taxable or not taxable. 194R is not on that footing and is worded differently, and therefore there's no requirement to check whether the amount is taxable or not taxable. And all that the payer needs to do is, if a benefit or a perquisite is being provided to a person and it is arising during the course of business or profession, you ought to be deducting 10% tax. The guidelines also read with the first proviso implies that TDS would apply when benefits are wholly in cash, wholly in kind, or partly in cash and partly in kind. Now, here there could be certain challenges because the proviso talks only of wholly in kind, partly in cash, or kind, does not talk of wholly in kind. Therefore, one view could be that in cases where the benefits are wholly in cash, then possibly 194 can be argued that it's not applicable and there's no requirement to withhold tax. However, the contra view here is that the proviso exists because it covers only those situations where cash is not sufficient, and if cash is being paid and is sufficient, then there's no requirement to cover in the proviso. There's also another thing that there could be certain overlaps here, because if a cash benefit is provided in cash, it is being provided to anybody, then it could possibly be already a commission or a covered by 194H. It could be for services, etc. Then would there be an overlap? If there is an overlap, only one section applies. Therefore, 194 ought not to apply, and the other section under which TDS is already being done would apply. Benefit or perquisites can also be in form of providing a capital asset, is something that's been clarified to say that whether it's a car, land, etc., that's been provided. This leads to a few situations where if it is wholly in cash, let us assume there is an interest-free loan that is provided to a subsidiary or an associate by the holding company. Would this amount to a benefit? It is clearly benefit as we understand. Then would these be liable to TDS? How would you value these? How would you account these? If these are being charged as a benefit, are we doing any of that today? And would then the TDS provisions coming in, does that create a lot of other complications? Waiver of loan, settlement of loan, there are certain aspects of this in the guidelines where they have actually relied on a ruling which was no longer the right position in law, because the Supreme Court thereafter has held that waiver or settlement of loan in Mahindra case is not really income that is taxable, and that's not a benefit or perquisite because it's not convertible into money and therefore it ought not to be taxable. There could be situations where you increase credit period. Let's assume as per the contract, your vendor has to get a credit period of 60 days, and thereafter there is actually a penal interest or additional charge that will have to be paid by the vendor if the payment is being made after the 60-day period. And if you suo moto or voluntarily or based on a request from the vendor decide to extend that credit period from 60 days to 180 days, is there a benefit to the vendor? The vendor is definitely benefiting, but could it cover these kind of situations? Because it is a benefit. Similar things on sale of goods charged lower than ordinarily charged, ESOPs which are granted. As we move along, you will see that one of the key aspects that's been covered is the sales discount, cash discount, etc. And the guidelines go on to state that a reduction in a price is ordinarily a benefit, but because of ease of implementation, etc., you need not subject it to TDS. Umesh, if you could explain this whole question 4, which is extremely important, and the aspects that are covered around sales discount, etc.
Yeah, I think before that, I would just want to touch a little bit on 28.4 and the
Right.
Supreme Court decision to which you drew reference, Mahindra and Mahindra.
Yes.
Mahindra and Mahindra was directly on 28.4, where the Supreme Court took a view that because of the use of the term whether convertible into money or not, it would not extend to something which is paid purely in cash. And the very terminology which is there in 28.4 also finds reference in 194R. And therefore, there is a school of thought, very strong school of thought, that 194R cannot extend to benefits which are provided in cash. The only difficulty, as you pointed out, is the use of the proviso, where they are making a reference to something where it is part in kind, part in cash, and where they have used the term that if it's partly in cash, partly in kind, then you have to ensure that sufficient amount of tax as is required to cover the entire amount, the TDS on the entire amount. And I think that is what is creating some amount of difficulty. But otherwise, the law seems to be fairly settled with a Supreme Court decision. And just because of the proviso, whether this would amount to a different interpretation on the scope of 28.4 and 194R will become an important question. In our view, it's possible to argue that Mahindra and Mahindra still is good law, and therefore 194R should not extend to benefits which are wholly in cash. But I think time only will settle on this. As we see the circular, it covers quite a few items. But I think one area where they have given some amount of practical consideration is when it comes to sales discount. Only relevant point here is that when they are explaining what sales discount, cash discounts, and rebates are, somewhere they are taking a view that sales discounts or any discount or rebate is logically a benefit which is provided to the other side. But in order to remove difficulty, they are taking a view that 194R should not apply. Now, I think these observations also could create some difficulty, because somewhere in this question, they have also said that only a particular set of discounts are covered. And therefore, if your situation is other than what is covered in the guidelines, then the liberal interpretation which the guidelines have said that no TDS under 194R may not apply. I think that is what is going to really haunt the taxpayers. They've clearly given an example where there are against 10 items, if you are providing 12 items at the price of 10, clearly everything is built into the price, and therefore since it is built into the price, TDS should not apply. Then they go on to say that in situations where there are incentives which are provided in cash or kind. Now, if the incentives are provided in kind, quite understandable that 194R should apply. But in situations where the incentive is given in cash, now that is going to become a very hot issue. Because if you look at the relevant question. It covers 3 items: sales discount, which is a trade discount given right in the invoice; a cash discount, which usually we understand is for any early payment; and then there is this omnibus category of rebates. Now, rebates could cover anything that's a refund against what is invoice, and therefore it's possible to cover a lot of items within rebate. But depending upon how an incentive scheme is worded, if the incentive scheme is so worded so as to provide extra incentive to the distributor, then it's possible to take a view, as the question itself is saying, that such an incentive is a benefit, and therefore TDS could be applicable. So when it comes to rebates, one will have to ensure that proper documentation is created. Either it is adjusted against invoices, or a suitable clarification is made between the parties to say that this is a rebate against sales that have been done in the past. An element which seems to have not been covered is when it comes to any service industry, where some adjustments in invoices could still be possible. In such cases, what happens to any adjustment that is done on the invoices? Presumably, one could still take a view that this is a reduction in the price for the services, and therefore whatever is mentioned in question 4 paramateria should apply even to any rebates or any reduction in the invoices in the case of a service contract. So, Ajay, can you go back to the earlier slide? Yeah.
Sure.
Yeah. So I think all of these items which could be applicable to FMCG, but broadly to the entire manufacturing or the service sector, any buy one get one, where items get bundled with the invoice, those would also be. It's possible to take a view that these are also discount, because everything is implicit in the price. Now, in situations where items are bundled, where you get a toothbrush free on every sale of a toothpaste, possibly we need to ensure proper documentation to ensure that there is a responsibility on the entire channel to ensure that these get passed on to the customers, because if there is a freedom provided that these don't get passed on to the ultimate customer, then it's possible to take a view that some of these could be treated as a benefit, because if they are retained by the channel, then it could be treated as a benefit. But by and large, the examples that are listed out here, most of them or all of them, barring some documentation issues, should get covered as an adjustment in the price, and therefore 194R should not apply. The next question is with regard to how these perquisites or benefits need to get valued. And I think this is also a very, very important issue, which is going to create some amount of difficulty. To some extent, whatever has been mentioned in the circular is contrary to some of the case laws that we have on the point. The first principle that the circular says is that the valuation should be on the basis of whatever is the fair market value of the benefit or perquisite which is provided. But then in the same breath, they clarify that if the benefit has been purchased or acquired by the service provider, then the price at which the service provider has acquired, that will be treated. So if there is a bulk booking or bulk purchase by the manufacturer who is providing the benefit, as a result of which the price is lower than the fair market value, it's the price which is paid by the manufacturer or the service provider which will be relevant. For items which are manufactured, they have taken a view that it will be the ordinary selling price of the manufactured goods by the manufacturer, and this also can create some amount of difficulty. Generally, this is a reasonably acceptable position, but the difficulty could be that what price do you take, because you would have prices at different points in time. The prices could have changed, and therefore whether you take a weighted average, a simple average, If you have different channels through which the goods are being sold and the price for each of the channels is different, what price do you take? Should you take the MRP or the price to the ultimate customer, or the price at which you are selling goods to your immediate distributor or your immediate channel? I think a better view could be that the price that you are charging to your immediate channel should be considered, but possibly some niggles which we will need to take care of. They've clarified that GST should not be included in the valuation. As we analyze the impact of this, if as Ajay has said that capital asset can also be a benefit, and in case a capital asset is provided to the recipient, whether the value at which it has been considered for the purpose of TDS, whether the same value would be available for the purpose of depreciation will become a very open issue. If there is a corresponding income which has been accrued by the recipient, then it's possible to take a view that the value at which the income has been charged, that becomes the implicit cost of the asset, notwithstanding the fact that the recipient may not have paid a cost directly. If you look at some of the case laws that have been rendered in the past, wherever a benefit in kind is given to a recipient, the circular seems to suggest that the price at which the manufacturer is providing or acquiring these assets, those will be considered. If it's a bought out item, then the price paid could be considered as the value of the benefit. But actually, when you see from the point of view of the recipient, the real value, and some of the case laws have taken this sort of a position, that the price which the recipient would have got if he sold the goods in the market, that's actually the amount of benefit that is derived by the recipient. And therefore, on the basis of what the guidelines provide, it's possible that the recipient may offer a different value for the purpose of his own taxation basis the case laws that we have seen in the past.
So one of the aspects which has been clarified is what is prevalent today, and where social media influencers actually get products, etc., which has been provided by the company to advertise and use it for the course of advertisement or promotion, and whether that would be a benefit. One of the very important aspects that is to be noted is, while they are answering this question, the CBDT very clearly states that whether there is a benefit or not will depend on the facts of the case. And for this particular situation, they have very interestingly put it into two categories to say, if the product is given to the social media influencer and it is returned, then there's no benefit, and therefore there'll be no liability to do TDS because there's no benefit arising out of it. However, if the product is retained, it will take the nature of a benefit or a perquisite. So somebody is advertising or promoting, say, a particular brand of the phone, and the company gives a phone to the social media influencer. If the social media influencer continues to use the phone and does not return it, there is a benefit. But if he or she returns it, there will be there is no benefit. But if they continue to use it, there will be a benefit. Now, what is the time period that is to be taken? How long can they retain? Can it be contractually? There is a commitment that they have to retain, and if they don't retain, what happens? Absolute silence about this. So whether it should be returned immediately, if it can be returned after 6 months, 1 year, there's absolutely no guidance on this. It just says that if the product is retained, it will be in the nature of perquisite. If it is returned, it will not be. Now, the other question is, what is the time at which the TDS will kick in? If I, as a company, handed over the phone to a social media influencer, do I deduct tax at that point, knowing well that it is returnable? Or do I deduct tax only if it does not get returned, and after how long? These are, again, things which are open. There are no answers to some of these things at this point. And then also situation of what Umesh was talking a while back about, what is the value that you will obtain? What if the purchase of the product by the social media influencer is actually at a nominal price? Whether there's a benefit between the two, again, not clear. What unfortunately is happening is some of these are not things which are coming out of the main section because the benefit and perquisite is not defined. Therefore, we need into the guidelines, so to say, is actually widening the scope and bringing some of these situations in, but does not cover every possible situation around these things. Therefore, it leads to some of these gaps and doubts as to whether these would get covered or not. But at least the social media influencer getting a product, that is an aspect that has been explained. Then there are two other things that we will discuss. These are two large things kept to the end, reimbursement and certain conferences, etc. I'll request Umesh to take us through this, and thereafter we'll just discuss the issues and what could be, in our view, the way forward.
Yes, so I think this is also a very important aspect where, whatever the circular seems to have stated seems to be a little away from the reality or from the legal position that we would like to believe should have been covered in the guidelines. So what the circular is trying to say is that, if there is a service provider, so I am a consultant. Consultant is doing some work for a client, and in the course of providing services to the client, it has to incur travel or other expenses which are necessarily incurred for the purpose of providing these services. Now, in such a situation, one would ordinarily believe that these are expenses to be borne by the client, and therefore, irrespective of the fact who is bearing the expenses, whether the invoice is in the name of the consultant or in the name of the client, once reimbursed, these are obligations of the client, and therefore there is no benefit or perquisite which is arising to the consultant. But somehow, strangely, the circular has taken a position that if the invoice is in the name of the consultant, then in such a case, the reimbursement will be treated as a benefit or perquisite. Clearly, it appears that the guidelines and the circular seem to be on the wrong foot. On the other hand, they have said that if the invoice for travel or any other expenditure is in the name of the client, and if the service provider is making a payment first and thereafter claiming a reimbursement, then in such a situation there will be no benefit or perquisite. So depending upon in whose name the invoices, the circular seems to be taking a position which I believe should not be looked at. What has to be looked at is whether the obligation to incur the expenditure was of the client or of the service provider. If the obligation was of the service provider, then clearly a benefit may be due. But if the obligation was clearly of the client, then irrespective of in whose name the invoice is, it should not be regarded as a benefit or perquisite. Yeah, Jay. So one of the other items which can create a lot of ruffles is what the next question, which is with regard to dealer conference. And when we talk of dealer conferences, it's not just in the manufacturing sector. It could be in the financial services sector, where there could be insurance agents, mutual fund distributors. I think virtually across the entire length and breadth of both the manufacturing sector and the service sector, these type of conferences could be seen. And what the guidelines seem to have said that if the dealer conference, and we are using the dealer conference just as a base, as I possibly it could extend to even other sectors where similar conferences are held. The circular seems to be taking a position that if the dealer conference is for the purpose of educating the dealer on the product, if there are some new products, on a marketing strategy, then such dealer conferences will not be regarded as a benefit or perquisite. But they put a small condition in that. What they are saying is that if the main purpose is, or let me put it the other way around, what they are saying is that if this conference is for a select high performing dealers, then clearly the benefit of no withholding tax or no TDS under 194 will not apply. And I think this is what is going to haunt the industry, because if you look at it from the perspective of the manufacturer or the service sector, where such intermediaries or dealers are there, obviously I want to reward only people who are performing well. So each sector would have A category dealers, B category dealers, and obviously you don't want to put in effort for the C category dealers, and therefore there'll be some amount of pick and choose that you are doing while holding these conferences. So just because there is a little bit of pick and choose, whether you will be asked to defend whether these are incentives which are provided only to high performing dealers, and therefore the benefit of no TDS under 194 R may not be applicable, will become a very open question. I think more than this, the points which are really going to hit people is what is mentioned in the last bullet here, where they are clearly taking a view that if the expense is attributable to a leisure trip or a leisure component. So if you are holding a dealer conference and there is some portion which is attributable to a leisure trip or a leisure component, then the benefit of no TDS under 194 R may not apply. As far as leisure trip is concerned, it's possible to take a view that this is a reasonable provision in the guidelines. But when it comes to leisure component, how in the world one is able to determine what is a leisure component? So if there is a gala dinner at the end of a dealer conference or as part of the dealer conference where there is some wine and dine, some Bollywood performer is brought in, there is some event, all of these situations, whether there is a leisure component will become very, very difficult. And how will we quantify? There will be hundreds of people who are attending, and whether you take a view that there will be a computation basis the number of people who have attended. Again, I believe that the circular definitely seems to have overstepped when it's trying to tax the leisure component in a dealer conference. Similarly, what they are saying is that if people are traveling and you are incurring the expenses on the travel, but if there is a prior stay or a extended stay, then this will be treated as a benefit or perquisite. Now, obviously, when conferences are organized where people from different parts of the country or maybe different parts of the world are to attend, because of logistics and various other reasons, it is reasonable to expect that people will come in on the day prior. And therefore, in such cases, whether there should be any component which needs to be carved out and which has to be treated as a benefit becomes very, very difficult. And clearly, I think the circular seems to be overstepping. Also, one will have to, whenever such events are organized, one will have to then suitably document whatever were the proceedings in the entire dealer conference to say that there was no significant element of leisure which was part of the dealer conference. So some amount of onus will shift to the companies to ensure that the dealer conference is not a camouflage for an incentive given to the dealers. So on the basis of the overall circular, I think some of the key questions that are going to be very important for us to determine is what is a benefit or perquisite. The fact that the benefit or perquisite should arise from the business or profession of the recipient. I think this is going to become a very, very important question, where there is a contractual liability or a promise. Again, whether this amounts to a benefit or perquisite will need to be examined properly. The circular, to the extent there is an example which is given where there is a hospital and a doctor which is attached to the hospital, and the manufacturer or a pharma company gives physician samples to the doctor attached to an hospital. The circular seems to articulate a position that in such a case, the benefit is actually passed on to the hospital, and therefore TDS needs to be done in the name of the hospital, and maybe a further TDS to be done when the hospital is providing this benefit to the doctor. And if the doctor is a employee, possibly under 192, and if the doctor is a consultant, then again under 194R. Clearly, as far as physician samples are concerned, I think the circular has pointed that out, that a physician sample is also a benefit. But if you take an overall analysis of the physician samples are not for sale, the doctor possibly can give it to the patients, but he is not permitted to sell those, and therefore to what extent this can be treated as a benefit or perquisite will become a open question.
And Umesh, one other thing that's important to note, while they have clarified these two aspects to say that the doctor, and they categorically call out that this is treated as if it's a benefit to the hospital and therefore TDS will have to be done. They go ahead and state that this will then be treated as an income of the hospital, and the payment onwards to the doctor will be treated as an expense, and the hospital will get a credit for this TDS. Now, the question is, tomorrow, will there be questions on whether from a perspective of 199, will this be income on which, you are offering to tax on which TDS has been done? Because there'll be admittedly no accounting entry for this. Tomorrow, if pharma companies give samples to the doctors, which hospital will pass an accounting entry of debiting expenses and taking an income? And once you don't have an income, then will you be eligible for credit? Opens up too many things. And second aspect on this is they have also gone ahead and gone further beyond what the law requires to state that even if the person is a consultant of the hospital, the same things will apply. Now, some of these are clearly widening the scope and applicability of the primary section of TDS itself.
Yeah, very true. Very true, Ajay. So, if we, yeah, Ajay, can we go to the next slide?
Sure.
So if you look
if I can come in and discuss about the way forward. So first of all, thank you, Umesh, Ajay, for this exceptionally good technical analysis of the provisions of the circular and what does it mean in practical terms. And clearly, as both Umesh and Ajay have laid out, whether something is a benefit or a perquisite or not depends on the facts of each case. And I'm sure each one of us are going to spend their time evaluating our facts to see whether in the light of what is stated, it falls under the mischief of 28.4 and 194R or not. There are a number of things which you might have to redo. So for example, number of clients have been calling us to say they need to reorient their dealer practices, they need to reorient the way in which they give discounts, etc., so that they do not fall foul of what is stated in circular under section 194R. And I'm sure all of you will be looking to doing whatever you need to do. We might need to relook at some of our documentation. We might need to do sort of a reconciliation between the stand that we take in GST and the stand that we take in 194R, so that the stand that we take in one does not come to haunt us in the other and vice versa. So we need to look at all of those. We need to look at our account policies, as again, Umesh and Ajay mentioned to you. There are certain things where there is no specific accounting entry and there is no point of time at which you need to withhold taxes. So you need to look at all of those issues which come in there. The one other thing which certainly we as FICCI would be doing is that we have a tax committee call coming up in the next day or two. And we're going to discuss the issues which have been raised here, assimilate some more inputs that we get from many of the industry players, and make a representation to the CBDT. And in that representation, we're going to put through 2-3 things. First is to say that there are certain items which are impossible to implement, as has been pointed out. And that impossibility of implementation is something which needs to be taken into account. The fact that some of the things are beyond the provisions of the Act, etc., is something which we are going to table to the CBDT. But more important, we are going to tell CBDT that, look, if there was a circular to be issued and made applicable from 1st July, you cannot come with a circular a week ahead of it and sort of look at imposition, because number of things need to be evaluated before a person can make a call as to whether tax is required to be withheld or not. And in the light of that, we would want to push back CBDT to push back the applicability of withholding, maybe by a period of 6 months. As you will recollect in the context of equalization levy, we had gone back to say, yes, this is a withholding provision, but that requires us to do certain things which we cannot do overnight. And the CBDT had gone back to say, yes, we'll push back the applicability by 6 months. So we'll try and see if we can go back to CBDT to say, please give us sufficient time to take care of it. We would also want to table to CBDT that if the circular is amended, particularly in the context of cash payments, etc., and some of the impossibilities are taken out, then maybe even though there are practical difficulties, the circular may not be that bad, and we could be something we could live with, etc. There is, of course, this final thing, and which is whether it would be appropriate for a chamber, maybe Chamber of Income Tax Consultant or any other body, to sort of file a writ petition in a court. As we discussed earlier, this is not 119 circular, this is 194 circular. And to go back and say that the implementation of this circular is likely to cause mischief, is likely to cause grave hardships. And because the circular is going way beyond the requirements of the section, the circular needs to be read down. No court is ever going to strike down the circular. But if at all a judge might want to look at the circular and come back and say, this is not for the removal of difficulty, there are issues which go way beyond what the Act provides, and therefore some of the provisions need to be read down. So those are some of the things that we need to do. I'm very, very sure that each one of you will be making those calls, seeking opinions on to be kept on your files, so that if tomorrow there's an issue on 201 prosecution for not withholding, etc., protecting yourself as a person required to withhold taxes, you will do all of it. More important, no consultant can have cognizance of all the business situations. And we would request you that if you could send in your mails to us telling the peculiar situations that you are envisaging where the circular's applicability is going to cause hardship, so that we can build it up in the representation that we have to make. We need to send out representation sooner rather than later, given the fact that the circular is applicable from 1st July. So please do send us your comments, your suggestions, your situations where you see the circular creating a hardship. If there are any queries that you would like us to answer, please feel free to reach out to us. I'll be happy to send you responses that you would have. And if any of you would like to have a copy of this presentation, again, please do feel free to write to us, and we'll be happy to share a copy of the presentation with you. Any last comments, Umesh, Ajay?
No, Dinesh, I think we have close to 100 questions. And some of them common thread is, and I thought important to clarify that, is that there are questions about gifts to employees during Diwali, employee off-sites, car to employees, etc. One very clear thing: this doesn't apply to anything that you've given to the employees, because that will be under perquisite's salary taxation. 192 will apply. This is only for those where there is a benefit arising out of business carried on by the person. Therefore, this would not apply to any of the employees. There are repeated questions on this, so I thought I'll just highlight that. Umesh, any final comments from you?
Maybe Ajay, can we take up a few questions?
We can do that, Umesh. I will. There are some very interesting ones. One of them, Umesh, is really on these timing, which is to say, when will 194R get attracted? Let us assume there is a leisure trip organized for the dealers, distributors, etc. Will it be at the time of payment to the travel vendor, or will it be after completion of the tour?
Yeah, I think very, very interesting. In fact, we had a similar question, and maybe I'll deal with that question, that if there are some benefits for which a provision is already made in the year 31st March 22, whether you could take a position that no TDS applies. I think clearly 194R is applicable when the benefit or perquisite is provided, and the date of provision of the benefit or perquisite will become relevant. In a situation of the type that you have discussed, I think when you enable the whoever is traveling for a dealer conference, when you enable him to travel for the dealer conference, I think that's the time when the benefit or perquisite will be considered to have been provided. So clearly, in a situation where the company which is providing the benefit is making payment to a vendor, it could be a travel agent. In such a case, the date when the payment is made to the travel agent may not be considered to be the date of provision of the benefit. There could be a difference between the date when the benefit is provided and the date when the benefit is utilized. And possibly in your situation, the date of utilization of the benefit could be later, but once there is a package which is provided, then the benefit could be considered to have been provided to the recipient.
Yes, and also, Umesh, one important thing to note, whether in the situation where this question has been posed, which is a travel agent and you're making a payment, or let's take another situation where a particular company is buying 100 mobile phones to be given as gifts to the dealers, etc., on achieving certain things. Those gifts are benefits and those would be taxable. Then there are two payments happening in both these, two transactions happening in both these cases. One is you are making a payment, one to the travel agent, the other for purchase of these goods. So if those are liable to TDS, for example, the purchase of goods is liable to TDS under 194Q, then you will go ahead and do that. That is at the time of making that payment. Thereafter, when those phones are given, there is another event which triggers TDS, and that's the time you will do TDS under 194R. And what we need to be extremely careful is the second event does not have an accounting entry. Therefore, how do you put your systems in place in terms of the first event, payables knows when the invoice comes, you are having a TDS liability, you will deduct. What happens at the time of second event? That's something that we will have to sort of take care and put those policies and procedures in place to ensure that there is compliance with TDS. Umesh, there are a few questions around, samples to doctors, etc. And some of them, and I'll just sum it up because there are 3-4 on the same lines. One is, if it is mentioned that it is not for sale, where is the benefit and how could the doctor be taxed? And second, how will you determine what is the thing if it is given to a doctor, whether he uses, doesn't use it, when will the TDS apply? And if those are replaced for any reason, what happens and when will the TDS apply? All around doctors and samples and gifts, Umesh.
Yeah, so clearly it's possible to take a view that a physician sample which is stamped that these are not for sale, and even under the Drugs and Cosmetics Act, the doctor is precluded from selling or monetizing this, and therefore a very, very good case to argue that there is no benefit or perquisite. In fact, there is a case law which has said that if there is some unauthorized use of a facility provided, that cannot be regarded as a benefit. But again, the onus will be on the pharma company, and as we have said right at the beginning, that these are TDS provisions, and therefore the person who's providing the benefit will have to really take a position because he is the one who's going to face the music.
There are now almost close to 150 questions. I think some of these, once they reach out and we can send out the presentations, etc. Should we just call it a day?
Yes, I would think so, because as it is, we are overshooting the time, and will be sort of, we can send across brief responses to the questions and share the presentation. I have received several messages already on the presentation, so we'll be happy to circulate it. It's been a pleasure bringing this to you. We had more than 500 participants throughout the entire presentation, which just shows the amount of interest that this and controversy this circular has created and is likely to create in the future. Thank you so much, and I hope this was beneficial and you enjoyed it as much as we enjoyed bringing it to you. Thank you, Ajay. Thank you, Umesh. Thank you, everybody on the call.
Thank you.